In less than 6 months, crypto and Web3 have virtually become bad words. Companies, they don't even want to invest in anything that has NFTs or blockchain or Web3 in the language. They have to navigate around that if they're trying to use decentralized technologies. Over $200 billion in market cap has been completely wiped off the boards. My name is Ben Lee. I used to work with blockchain. I used to work with tech. I built a company with over 350 plus employees. Today, I'm going to be talking about why this crypto winter is going to be a very, very different one than previous years. So the first reason is DeFi and derivatives didn't actually exist in previous years. It's been a fairly new addition to the world of Web3 and blockchain. This means there are a lot of cool things that can be done with DeFi, like earning high interests and yields and being able to borrow money in third world countries. But there's also a lot of risk. This means that Gen Z are playing with incredible amounts of leverage and debt that were never seen before in the crypto world. So for this reason, you've got traders playing with 10, 20 to 1 ratios, making it almost impossible for them to not lose when the crash or the market happens. Most Gen Zs are also too young to remember what happened in 2008 or movies like Margin Call, where it explains exactly like this, where it explains most of what we're seeing today. People playing with too much debt, too much leverage, and they get completely wiped out. We've never had crashes of this magnitude in the history of crypto and BTC. I've lost a lot of coins from collapses. I lost a lot of coins with Mt. Gox. I've lost a lot of coins with other secondary wallets. But what I've seen here is never have we lost $60 billion from a stable coin or complete Ponzi's coming out of the woodwork like Celsius, who were promised 17% yields on your money and then of course completely implode within a matter of days. It's going to be really important to see what happens if BTC reaches levels below 19,000. It already has. It's kind of staying around the 20s area. So if it goes below 19, this is an indicator that this is a whole new level of sell-offs that we haven't seen in a long time. What everyone has believed for the last 10 plus years is that crypto is actually a really, really important and great hedge against inflation. Well, for the first time, we're learning that's simply not the case. What we've seen is the last couple of years, crypto has really moved with the Wall Street markets and the global markets. So if the markets are up, crypto's up. If the markets are down, crypto is down. Despite having a lot of inflation in the last year, crypto has actually gone lower, which is the exact opposite of gold. With inflation times, gold actually performs better. And it's proven to be the case this time as around, where gold is actually a strong hedge right now. And then you've got very public figures like Snowden. Snowden is what you would call a crypto anarchist. The guy literally moved to Russia to open source and leak information that he felt was really important for the public to know about, specifically spy programs that the United States were engaged with. Most of the deals he's done, transactions-wise, whether it's buying laptops or equipment or materials or whatever, was using cryptocurrencies because after all, it's anonymous. But what he said is that he thinks it's a great utility from a financial services perspective, but he would never invest in, he would never advise investing in it, which is really quite interesting, especially coming from someone who probably has like a lot of BTC logos splattered all over his wall or on his laptop. So seeing a lot of these like OG guys all of a sudden have a change of heart, especially from an investment perspective, is really, really interesting. You've also got a lot more critics, from Bill Gates to Charlie Munger to Warren Buffett, guys that have been a little bit unclear, sitting on the sidelines with crypto, saw its massive boom in the last year, all of a sudden started investing a little, and now they're kind of dialing it back and going the "we told you so." It's going to be interesting to see what happens the next couple months, and if we start to see another bull run in, let's say, a year, do these celebrities or public figures have an attitude change? Probably the biggest thing for me is that there's still very, very little real life use cases and applications. When you send money with Zelle, is it that slow? When you use Venmo, does it not work? When you use QuickPay, when you use one of your favorite payment apps, is it so inefficient and so broken or so slow that you need to solve something new with blockchain? For me, the answer is no. I use these services just fine. In fact, oftentimes it costs less than the cost of gas. Right now, there are not that many people using the Ethereum network, for example, so gas fees have been a lot lower. But in general, when a lot of people are using the networks, gas fees can be extraordinarily expensive. It could take a while to get your payment. So I'm still not seeing a whole lot. For this reason, when I see companies that need investment, I look at what they're going to actually do in the real world. Most of the stuff that I'm seeing is really quite contained. either in NFTs or the creations of DAOs and how these organizations are run, which, by the way, are great ideas in theory, but in practice, it doesn't really work all that well yet. I'm not trying to sound like a hater. I've tried that before and I've got completely flamed for it all over Reddit. I've been trolled, I've been doxxed for being an anti-BTC, which I'm not. In fact, I'm more OG than most people who watch this video who are actually OGs in the community. I got involved in 2012. But what I am saying is that it's still highly speculative. There's still a lot of great unknowns. Stable coins are not so stable after all. Algorithmic trading has a lot of question marks around it. So be cautious, be smart, don't invest expecting to see massive gains. Invest because it's a small allocation of your net worth, maybe 2, 3, 4, 5% max. Now, part of why I choose to really have one foot in, one foot out in the crypto and Web3 world is because of the crypto bros. The community behind crypto are some of the biggest a-holes. I saw this in the ICO craze in 2017, and now I'm seeing it again now. When I first got involved in crypto, these were not the people involved in community. Like I was saying earlier, they're mostly crypto anarchists, guys who hide in basements, grow their own fish, mostly spend a lot of time on zero hedge, aren't into material possessions, want to live as minimalistic as possible. So this has changed drastically in the last couple of years. We've seen the rise of the crypto bros, flashy individuals, guys who want all the cars and watches and sort of rapper life and all these things. And now we're seeing them get liquidated hard. We're seeing them sell all their Rolexes. We're seeing them have to sell their cars, their real estate. I'm seeing this in Costa Rica by the ton. So many guys came here spending and dropping so much, and now they need to sell all of it. So as much as we were hating on the bankers of 2008, 2009, at least these guys had to go get a Series 7 or a 63. They had the accreditations, they had the education. These crypto bros have nada. Nada. It's good. Let them get filtered out. I think every single market cycle needs this to happen. So more accredited investors, more smart builders, more people who are doing it for real life application and technology start to thrive in this world. So those are my reasons for why I think this crypto winter is gonna be a little bit more chilly and different than previous ones. If you like my videos, make sure to hit subscribe and make sure to check out my next video on some side hustle habits I think you can implement today if you wanna start earning extra income in an increasingly difficult downward market and economy. See you next time, guys.